Hi there everyone and welcome to Buy Now Sell Now, the weekend edition. We've got the big budget event done and dusted. The markets hailed it as pretty much a positive on all parameters. But this show is focused on your wealth creation ideas and how to help you build up on your portfolio. RBL Bank and PNB, that's what we will be discussing today on the show. We also have two portfolios lined up in our Portfolio Advisor segment. That's Chandrasekharan and Vijay Sarthi's portfolio on the show. Time to bring on board our experts. DJ Kalingam, he's the founder, Economics Research and Advisory. He joins in on the fundamentals and on the technicals. We have with us Manas Jaiswal of Technical Research Group. Gentlemen, lovely having you with us on the show. Time to kickstart with our first query for the day, and this one has been sent in to us by P. Chaudhary. It's an email query, and he's got a question on recently listed RBL Bank. He says that he's got 500 shares of the stock. He's purchased it at 370. He wants to know what to do. Should he hold on or sell? It's a 6-month time horizon. Now, do remember the RBI had just recently come out with the rules that banks can use statutory reserves for their 81 bond coupon payment. This will definitely reduce the borrowing costs. The budget also targeted about 10,000 crore rupees for PSU bank recapitalization infusion, which many would have seen as a bit lower than what was initially expected. The tax relief as well for the NPA provision at 8.5% announced in the budget versus 7.5% earlier. So, Mr. Chokalingam, let's look at the budget math. Let's look at RBL Bank, 390 rupees. What do you think should be done now for the next 6 months? Is this a stock to hold?
For 6 months, I would suggest sell because on a small base, RBL has been doing very well. In terms of valuation, it is slightly more than 3 times book value, adjusted book value for FY18. So therefore, I would suggest sell and buy Axis Bank. As you mentioned, budget is more favorable to the banks which have got higher NPAs, and Axis Bank has got higher NPAs. The 100 basis point increase in the tax exemption is positive, and also the stock has crashed a lot. And valuation wise also it's around 2 times as compared to over 3 times for RBL Bank. So therefore, I would suggest this switch.
Budget favored banks with high NPAs. Axis Bank is a case in point. Put your money there. That is what Mr. Chokalingam is advising for 6 months. But let's understand this from a technical standpoint. Manas just wanted to get in your views here. If we just pull up the charts, over the 1 month or the 3-month period, the kind of movement that we've seen in RBL Bank has been fairly encouraging. But do you think in terms of how it stacks up vis-a-vis some of its other peers, that it may not be the best of stocks to have? What's your view? Because there's not really too much data to go by.
Yeah, we don't have much history in RBL Bank, so it is very difficult to give long-term view technically in RBL Bank. But yes, the stock is making higher tops and higher bottoms for last, I think, 4 or 5 weeks. Yes, stock has some resistance near to 400, 410. But if you look the medium-term charts, I think stock has potential to break 400, 410. I think stock has potential to test 435 and 450, say around 2 to 3 months time. So definitely one can hold it. I think stock is trading above 50-day moving average. So keep the stop loss below its 50-day moving average, which is placed near to 362. So your stop loss should be 362, and you can set the target of 430 for next 2 to 3 months time.
Okay, 435 is on the card, so look to stay invested in RBL Bank. That is what Manas is suggesting. Let's get in P. Chaudhary's second query. This also is on a banking stock, by the way. And what has he got? PNB, 1,000 shares purchased at 125. He wants to know whether to stay invested or sell, yet again a time horizon of the next 6 months. Now, let's talk in greater detail about this PSU bank in terms of the kind of earnings that it's delivered, in terms of how it stacks up vis-a-vis some of its other peers. There's been lots of news with respect to bank recapitalization that we spoke about for the PSU banks. But Mr. Chokalingam, some would argue that that target of 10,000 rupees is not justified. And given the huge NPA mess that we're seeing, such a paltry sum would perhaps not be enough. And how would you look at the prospects, the fundamental prospects for PNB in light of all of this?
Yeah, you are absolutely right. The 10,000 crore is peanuts considering the outstanding NPAs of the banks. So 10,000 crore is not enough for recapitalization. However, I would suggest to hold on PNB because as I mentioned earlier, the tax benefit is there from the budget, and most importantly, it is sitting on a huge net NPA outstanding, which is almost 70-80% of its net worth. Now, if we can do some sensitivity analysis of assuming even 10% of the money is collected by PNB over the next 1-2 years, then on its adjusted book value it can give you a big boost. So therefore, I would suggest most of these PSU banks like PNB, at least for another anywhere from 10 to 20% upside.
Okay, that's the view coming in. Recapitalization wasn't enough, but let's focus in on PNB. And Mr. Chokalingam says that yes, you can stay invested for targets of 165. No doubt, Manas, it's had a pretty stellar week, piled on a good 9% after being at about 136. It's jumped to 150. How much more upside? Let's talk next 3 to 6 months.
See, understanding PNB, I think you should first understand Bank Nifty charts, because we have already witnessed almost 300 points rally in Bank Nifty in last 5 to 6 weeks time. But still, Bank Nifty has a lot of potential. I think you may see a lot of outperformance in banking space, and Bank Nifty can give around 8 to 10% up move in next around 4 to 6 months time. So definitely you can put your bet on banking, especially PSU banking, where we have witnessed a lot of buying interest in last 2 to 3 weeks time. PNB rallied smartly from the level of 114 to 150 in last 4 weeks time, but still stock has a lot of potential. The first target comes near to 162, but looking at the medium term charts, I think stock has potential to break 162 also. Possibility is high that stock can test 175 in next 3 to 4 months time. So definitely he can hold it. But my suggestion is just keep the stop loss below 134.
Okay, so definitely stay invested. That's a consensus call coming in when you approach PNB from our fundamental as well as our technical guests. Tell you what, we'll take a quick break right here on the show. Stay with us. On the other side, 2 portfolios. That's what we'll be discussing. Thanks for staying on with us. This is Buy Now, Sell Now Weekend. Let's focus in on our Portfolio Advisor segment. We've got V. Chandrasekharan. He's a very regular viewer and he sent us in his portfolio. He's retired, he's 63 years old, and he's got a total of 6 stocks with a long-term view. Thank you for sending it in. Let's help you out then. It's Tech Mahindra first up. Buy price is 472. Interglobe Aviation, 10 shares at 935 rupees. Apollo Tyres features on the list, 100 shares bought at 186. And then there's Coromandel International from the fertilizer pocket at 321. Indiabulls Housing, another mid-cap, 15 shares purchased at 764, pardon me. And ICICI Pru, 20 shares at 361 rupees. Well, all in all, he's not making too much money on his investments. What should he do? Let's start off with the first 3 names. Mr. Chokalingam, Tech Mahindra, what do you reckon he should do at 472, given of all the concerns that are coming in from Donald Trump's administration, Interglobe Aviation, and do you like Apollo Tyres?
As far as Tech Mahindra is concerned, he can continue to hold. As you mentioned, there are a lot of negative news flowing from global factors, and the industry has also started growing in a poor single digit, even in rupee term. However, I firmly believe that the US president will not have very serious adverse policies against India, considering the political alignment which is evolving among India, Japan and the US. So valuation wise also Tech Mahindra is very cheap, so therefore I would suggest hold. Indigo I would strongly recommend hold, even add at the current level. I firmly believe that the oil price may not hold up at $56, $57 because US is constantly increasing the production of oil. This year it is expected to increase substantially as against a decline in 2016. And even OPEC and with non-OPEC members, I have doubt whether the agreement would last for long. Now, Interglobe Aviation, a market leader with 40% market share, very interestingly, it has got a strong balance sheet. This is the only aviation company in the country to have that kind of strong balance sheet. And therefore, I would suggest hold. Apollo Tyre, I think this is a time to move away from tire theme, because from the bottom of last year, synthetic rubber prices have gone up by almost 80%, and the domestic natural rubber prices have gone up by more than 70%. In fact, the rubber prices are going very strong even day by day. And on the other hand, we have seen a big fall in the two-wheeler sales. In fact, on Friday, we saw MRF number also, significant hit on the profits due to the raw material price hike. So therefore, I would sell Apollo Tyre and buy Balmalari company, which has corrected more than 20% from the peak. And after seeing a BEML strategic sale, I firmly believe that many POCs would join strategic sale, which would be positive for Balmalari company.
Okay, that's the view coming in. Few chops and changes. What about Coromandel International? Do you like that stock? India Bulls Housing at 764. He's only making marginal money there. And ICICI Pru just not even breaking even.
I used to like Coromandel, till a couple of weeks ago, but the stock has moved up from bottom of 150 to, the current level. So it has given more than 100% return. And we have to remember the fact that, this Jan-March quarter is normally the worst quarter for fertilizer companies because it coincides with the beginning of summer and the crop, the farmers don't buy fertilizer in usual quantity in this particular quarter. So on the other hand, the stock has already played out in a big way. So therefore, I would sell and buy MOIL. MOIL has increased the manganese ore prices 5th month in a row. After that, they have cut down only by 10%, which is very small as compared to the cumulative hike. And also the company has done buyback. Now it's on a reduced capital. There would be earning explosion because of the price rise. So therefore, I would suggest this shift. And personally also, I hold MOIL. And as far as India Bull Housing Finance is concerned, I am quite negative on housing finance companies in the next 1 to 2 years. The demonetization not showing impact in December results. That is because outstanding loan will start taking hit going forward. And I believe this is a time to seriously think about holding, all the housing finance companies. I would sell India Bull Housing and shift to Bharti Infratel, which has corrected nearly 25% from the recent peak. And I don't think the merger of Vodafone and Idea would kill the stock so badly. There could be some loss of business due to optimization of tower usage by Idea and Vodafone, but definitely Bharti Infratel would come back with the growth path. Therefore, I would suggest this shift. As far as ICICI Prudential is concerned, for the last 3-4 years, whether you take the business or profits, they are growing in a poor single digit, whereas Axis Bank is growing despite the problems, the business in double digit, and also valuation wise, it is cheaper than even ICICI Prudential in terms of price to book value. So therefore, I would shift from ICICI Prudential to Axis Bank.
Okay, that's the entire portfolio. All of the rejigs have been mentioned, and I hope that we were able to help you out with those investment ideas. Moving on from one portfolio to another, now we have Vijay Sarthi's portfolio. Vijay Sarthi Shankar, 46 years of age, 5 stocks totally, an investor, and it's a 6-month time horizon. So let's find out what he has. RBL Bank first up at 370. There's L&T, 1,000 shares at 1450. He's also got Bharat Financial, 380 shares purchased at 945 rupees. Moving on to the pharma space, and there's Aurobindo Pharma at 850, and finally BEML, 200 shares bought at 1,200 bucks. So there's a mix. It's well diversified, but does he have the right stocks and more importantly the right price? Start off with RBL Bank, L&T, and what the outlook is in light of the fact that the guidance was slashed, as well as Bharat Financial.
Yeah, RBL I already covered. I would suggest shift from RBL to Axis Bank. L&T I would hold. Despite a tough time, industrial economy is struggling to grow. L&T has been reasonably doing well. Order inflow has been impacted, but I am sure if you believe in the Indian economy and the stock market, then you have to believe the most efficient leader like L&T in infra space to come back. And also the stock has corrected substantially from its peak. So therefore, I would hold. Bharti Financial has moved up again after seeing the major crash from its peak price. I would sell and buy Indigo. Basically Indigo has corrected more than 30% from its peak price after the listing. So from here, I believe Indigo would definitely outperform Bharat Financial.
All right, so there is a better stock to have, Axis Bank and Interglobe Aviation. Why not add those two names in your portfolio instead? Let's move right on then to Aurobindo Pharma at 850. Lots of news been going on within the pharma space. What's the outlook? And do you like BEML at 1,200 bucks?
Aurobindo Pharma, I would sell, because if you look at September results on standalone basis, the inventory and receivables are 69% of its sales, which is giving me a lot of discomfort. So in pharma space, normally I don't like companies which are having huge receivables and inventory. In the recent past, some of the companies had a very tragic end because of this spurt in the receivable and inventory. So because of that, I would sell, and for same reason I would buy JB Chemical, which has got an excellent balance sheet. Whether you take a working capital or leveraging, it's a net cash company sitting on more than 300 crore cash. In terms of valuation also, on 1 year forward earning, it's trading only around 15 times, despite having more than 300 crore of free cash. And personally also I hold JB Chemical. I suggest shifting from Aurobindo to JB Chemical. As far as BEML is concerned, the problem with this company is that it lacks consistency in the performance. If you see last 3-4 years, and stock also has run up from the bottom substantially. And of course, the government has announced a strategic sale, but I have a little doubt on the valuation because we know this PSU having a lot of huge army of labor, and therefore the run up in the price, I feel it's a fairly valuing the company even for strategic sale. So therefore, I would sell this BEML and buy MOIL, which rationals I have already explained. I firmly believe that MOIL has a potential to go even beyond 550 rupees in the next 1 year itself. So therefore, I would suggest this shift.
Okay, those are quite a few changes that have been made in the overall portfolio. Thank you, Mr. Chokalingam, for helping out with this. I do want to run our viewers through an important disclaimer that this is only a model portfolio. Please do consult your individual investment advisor before taking any decisions. On that note, we take a quick break right here on the show. Stay with us as our guests run us through their top recommendations. Great to have you back with us. This is Buy Now, Sell Now Weekend. And let's talk a little bit about the markets. Clearly, the budget got a big thumbs up from the equity markets. We surpassed that crucial 8750 level on the upside and went on to end the week with a pretty smart gain. The Sensex too, and clearly, it looks like it's been a very well-received union budget. So what's the way forward from here, Manas? I just want to understand by way of levels. Have we run up too fast? And what would be the next crucial level that you would pinpoint? When do we get back to the previous highs?
See, the possibility is very high that Nifty can test its previous high of 8950, 8960, because on Wednesday we have witnessed a clear breakout on the charts above 8660, and Nifty is trading above 61.80% retracement level of entire fall from 8900 to 7900. So now the possibility is high that Nifty can test its previous high of 8950. So if you're a trader, I think even at current levels, one can take a long call. Nifty has a lot of support in the range of 8630 and 8610. So keep the stop loss below 8610. Till it is trading above that level, you can buy on any decline on Nifty. You can set the target of at least 8950, say around for the next 2 to 3 weeks time.
Okay, there you have it. That's the view coming in on the markets. There is a possibility that we do scale those previous highs. Okay, let's get to then the top stocks. And Manas, what is it that you've picked out for our viewers? What's on the radar?
See, my first pick is Union Bank, because we have witnessed a lot of buying interest in most of the BSU stocks in last week. But now Union Bank has given a clear breakout on Friday. It broke the resistance of 156 with great volumes. I think this is a clear breakout case. You can see the target of around 180. So even at current levels, one can take a long call, keep the stop loss below 159. And second call is a buy call on Granules India, where stock was facing a lot of resistance near to its 100-day and 200-day moving average for last 2 months. Stock has made a base near to 102. Now on Friday, it broke that resistance, and now it is trading above its 200-day moving average. So possibility is high that we may see further recovery. Granules can test 139 soon. So here one can take a long call, keep the stop loss below 120 to 23.
Okay, that's the view coming in on the top recommendations. Let's move right on. And Mr. Chokalingam, what is it that you've picked out?
Yeah, basically I picked up 2 stocks. One is Daiichi Karkaria. It's a very deep value stock, and it may not be ideal for many investors. It is ideal only for those investors who are willing to wait for 1 to 3 years to make wealth. This is a specialty chemical company, strong balance sheet, got a cash per share of around 60 rupees. It's also expanding its capacities at the Dahej plant and trading at around 14p on 1 year forward earning. Most interestingly, it has got a joint venture with a 50% stake in Champion Daiichi, which is a joint venture with $3 billion Nalco Champion. And very interestingly, the company has invested just about 68 lakh rupees investment in this joint venture. Now it is getting a dividend of almost 6 crore every year. And this company is a growth company, this joint venture company. So considering all these facts, I believe in 1 to 3 years, Daiichi Karkaria can create very good wealth for the investors. The second idea is Tata Sponge. We all know that last 6 to 8 months across the world, material prices have gone up. Even the sponge iron prices have gone up by almost 27% from their last year low. This company is a cash-rich company. The cash itself is around 54% of the market cap. And very interestingly, a lot of small players in the industry, sponge iron industry, they have shut down over the last 2 to 4 years. So which is very positive for Tata Sponge. And in terms of valuation also, it is attractively traded. And in fact, we saw global reports in the last few days expecting the material prices to remain very firm throughout 2017. So considering all these facts, I suggest a strong buy on Tata Sponge.
Okay, those are some top recommendations from a long-term view that Mr. Chokalingam is advocating. But Manas, we only got one stock down. That was Union Bank. What's the next stock?
Next stock is Granules India, where stock was facing a lot of resistance near to its 200-day and 100-day moving average for last 2 months' time. But this week it broke that resistance. It is trading above 200-day moving average now. So possibility is high that we may see further recovery in Granules. It can test 139 soon. So here one can take a long call, keep the stop loss below 123.
Okay, there you have it. Union Bank and Granules India. That is what Manas is recommending. On that note, gentlemen, lovely having you with us today on the show. Thanks for joining in. We'll see you same time next week. Thanks for watching.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.